All right, microphone check and screen share check. All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Friday night, September 29th, 2023. I've uploaded for you, in addition to the weekend reports, a copy of an article from Harvard Business Review from Professor Angus Fletcher and then one of my students, Tom Gaines, who are writing about the creativity training that they're doing with the Army Special Forces based on some work that we've done with research at Command and General Staff College and some work I've been doing with Fletcher with storytelling and kids and that my student Tom Gaines has been doing with SOF. So pretty cool to be published in that prestigious of a journal article, and the information that's in there is consistent with what we teach in the Creativity 101 and 202 course. And if you listen to last night's Foundations Q&A, I actually spent some time at length talking about storytelling, story science, creativity, true storytelling, personal learning environments, and what it takes really to supercharge your creativity, which gives us an unfair advantage in the markets, which is what we want. So pretty cool article. We're going to start with the hybrid swing portfolio. 30 minutes. We're going to look at all of these symbols, starting with Alcoa. This is our 5-day look back. This is the 1-day price performance today. These red boxes represent standard risk based on statistics. Green dots are buying points. Red dots are selling points. You can see that we're using simplified graphics of the 10-period Bollinger Band plus or minus a half, which color-coded orange, which we call the dragon, which really smooths out the curve. We have a 30-period regression line, which is the slope of that is the health of the trend. So you can see what we have here is a nice big sell-off from a price level to price level. So it acts very symmetrically on the turning point. And we're using a 10-period moving regression line that is color-coded with the 4 seasons of MACD histogram mapped to that. You can see we've got the fall, winter, spring, more failure in the winter, spring, summer. So we want to use that to help us identify these critical states and turning points. And that forms the basis of our hybrid approach to swing and day trading with the 30-minute charts. Is it swing trading? Yes. Is it day trading? Yes. Is it a combination of both? Yes. That's why it's a hybrid. So we'll start with Alcoa. And the most recent trade was the COTA 2 entry. It's COTA 2 because we have support. We had one little tiny successful trade. It sold off, it held. We re-enter on the PSAR flip, which is above, in this case, above the RL10. That makes this an emerging dragon. So we get an entry with our standard risk, and we're using the PSAR as our guide for exit. It closes well. It gaps up and goes. On the resumption or continuation, we had a second position here. This is also slightly more than 2R, so we call that the 2R battle drill. It holds right here. That's awesome, and it closes there. So that was yesterday. We entered today with about 4R in hand and those two positions, and it gapped up to here and continued to go. And then it couldn't make a new high, and it was starting to stall where you would expect it to stall. And when the RL10 rolls over, we take the dragon exit, which is once this is rolled over, I'm defining that dragon exit as the edge, that upper edge of the dragon. So there's the midpoint, here's the lower skin. So again, that's a 10-period Bollinger Band plus or minus a half. So as long as that price is north of that dragon, everything is good. But once that RL10 rolls over, that becomes the dragon exit. We want to lock in all of the price goodness north of the dragon. So that's why that gives us the exit right there. So if this is our unit of risk, and it is, that first position, 4, 5, 6, 7, that first position returns 7R. The second position returns 1, 2, 3, 4. 11R in 2 days. Now you'll notice that this move starts right near the summertime, and when it crosses this dotted line in the MACD, and then here's the first leg, and then the summer continues. It crosses over, so that's the alert that that run may be done, and that coincides with the RL10 rolling over here. And then with 11R in hand on a Friday afternoon, and do I really want to carry any over weekend risk? No, I do not. So that's Alcoa. Now, what makes this nice is that all it did was recover from the sell-off, and now it's rejoined what some people would say is a fair value. And then you got this little sell-off. Now that's going to form a cup and handle, some people would say. So if this resumes, any breakout above 29.80 is going to be massively good. So I'll be looking if on Monday there's some price action in here that I can get long. Like if it gaps down to here or opens here and I can get 2 units of reward to 1 unit of risk, I'll try to front run that move inside the yellow zone. And then if it takes off above that, I'll put the second position on and it'll be free and clear. That in a nutshell is the entire hybrid swing trading workshop. 100% of what you need to know is in that case study. So study that, ask your questions, and give it a try, and learn from your informed practice. And I talked about that last night at length in the Foundations course workshop. So 5 minutes of instruction and an hour's worth of educational explanation. That feels about right. That's what reflective learning feels like. AI, yesterday, we initiated a COTA 2. Why is it a COTA 2? Because of swing low, higher low, and it resumes. In this case, it was a COTA 2 because it had not exceeded the peak of the RL10. If we'd have waited and entered up in here, that would be an emerging dragon. Has a little more certainty, but rewards a little less because you get paid an extra bonus for taking the risk a little bit sooner. But it had just crawled into the summer and it gave us a summer, fall, summer. So I like that. Again, standard risk. It closes here. Today it rode up to here. There's the 2 dragon horns. It could not hold, and it comes back to the edge of the dragon, so we take that for 1R. And no overnight risk. And I like the fact that in the second half of the day, it gives us another kind of a Kata 2 looking shape. So if this resumes on Monday, I'm ready to jump on that. By the same token, failure below the low of the day would be a signal to the short side that it's coming back to here. So I love this as a compound critical state. Where could you learn more about a compound critical state? Well, coming to a bookstore near you soon is our first book, finally, Foundational Trading, Planning, Preparing, Executing, and Assessing, Mastering Trading Strategies for Continuous Improvement. So thanks to the team that helped put that together. Here's why we wrote the book and what we want you to get from it. And then the spirit shaman badger has such a face of focus. He's daring you to blink or to turn away. That's a serious person. And it's a serious book that documents our last probably 30 years of the trading community of practice. I'm really proud of that book. So coming to a bookstore near you. So that's AI. Amazon, no trade. So we missed a couple, there may have been an opportunity for Kata 2s in there, but that opportunity is still going to be there. If it breaks above this price level, and certainly above this price level, we can be long. The real signal will be above this one, and then that sell-off will have been erased or negated, as Bob Gardner used to say. And then that's going to be your important signal. So this is some tactical trading in here. This just wasn't clean enough for our purpose, so we just stand aside. This is Caterpillar taking our measured shots. Here's a emerging dragon and a Kata 2. And rolls over, take the PSAR exit for 1R. We covered that one this morning and made that a stop and reverse. It felt correct. And that sells off, gets into the winter time, but then fails to fail further, because you would expect on real weakness it's going to come down and test this, but it didn't. As soon as that reverses, the next thing I'm looking for is the edge of the dragon to take my dragon exit. So we end up getting this much gain for that much risk, and that's about 2R. Check. Now, because it did not fail down to here, it did not fail. This is now setting up a Kata 2. The last time it held at this support level, it did this. So you're not allowed to be surprised Monday if it does that. The first place that it tests is here. And if that breaks, it'll then test here, which is the 5-day high. And if that breaks, up we go. But if this fails, the first place it fails is the low of the day, then the 5-day low, and that's where we want to kill it on the short side. Framing in both directions. Cliff Natural Resources. So yesterday we played the Kata 2 continuation, and we took the PSAR exit, just like we're supposed to. 1 unit of risk, 1, 2, 3, 3R. It's probably a little more, but let's give it some slack for slippage. So 3R. That's really been a powerful move. If we step back and looked at that a little bit on a wider lens, you'd say there's leg one, pause, leg two. So if this holds, we'd love to see leg three. And it would be about this size, about $1 of additional gain. But if this fails, then a return to this price level and this price level would not be out of the ordinary. So this is in play. The bias is to the long side, but opportunities will abound. CVS initiated the short. What attracted me to this one was, first, we got some markets money in play, and then there was a buying effort right here, but that failed almost as soon as it started, which, if you discount that, this just looks like consolidation from this bounce and then no follow through and potential for a return to this sell off. So intraday, on failure at the PSAR, I initiated the short, standard risk, and I'm holding about 0.5 R. And that's one that I want to hold over the weekend because this one's gappy, and I'm persuaded there's a good chance for downward gap. Dish Network about 3R on a supported spring crossing after the long sell-off in the usual way. I like the nice tight consolidation here. The fact that it did not fail all the way down to here is promising, and that makes me want to think of that as a compound critical state with a tight risk box. That box of noise is as big as the standard risk. So if it starts resuming, I can take that as a stop and then try to get a second position if it breaks above the emerging dragon. And then I think it gets to here, and then here, and then onward. So that looks pretty good. The short side trade is immediately obvious because we're right on the border of going into the winter. So we frame it in both directions. Devon Energy. Took the intraday opportunity for 2R, usual. Electronic Arts, caught a 2, didn't follow through, took a fractional gain. Emerging markets, I thought hard about this one. There was this, we were short. It's had a significant sell-off. The gap was to the high of the day, immediately sold off, rebounded, and then started to fail again with a lower high. So I was really tempted to just slap a risk box and let it come back to here. Talked myself out of it. It chopped around, and when it broke through the PSAR, initiated the short, and then it really didn't do anything but gave us about 0.5, and I didn't want to hold that overnight, over the weekend. So we'll just be ready for this as a consolidation and ready to break either way. Ethereum tried the Kata 2 and scratched. Mexico, this was a gap up and then a sell off. I took the risk box from the top. Now this is a much more orderly trader intraday. And so I'm willing to make that move right away. And it returned about 3R. And I didn't want over the weekend risk. Cashed the long in Brazil for about 4R and didn't want to hold it over the weekend. I'm encouraged by that little trailing recovery move that has started to hint at another leg up. So we'll be watching that one on Monday. Intel, no trade. International Paper tried the gap and go and took a half an hour on a failure to follow through. Real estate closed a 3R trade on a supported spring crossing. Regional banks, the gap and go we just kind of mucked around and failed, took a fractional gain. This looks, this looked like some weakness here and no conviction. So if that fails on Monday, a return to this price level is the reward for being on the short side. And that's about 2 units of reward for 1 unit of risk. So especially be watching that one to the short side. Mattel tried the short. The bottom, this is what a bottoming tail looks like. You have a large range bar that reverses intra-bar and closes near to where it opened. And when it goes this way, that looks like a bottoming tail. And that means this could very well be a support level. It held support here briefly. So if this resumes on Monday from right here, you could then use this as your risk. And then on the intraday move, there's a 3R to the top of the day. That's tactically tradable. And then you wouldn't put your second position on until it gets above there. And then you'd be very happy. McDonald's, so we closed the speculative long from yesterday, which closed here, and then it just started selling off. So kept a fraction, stopped and reversed, took the dragon exit for about 2R and flat over the weekend. I'll continue to trade that one in both directions, but it's getting to be pretty attractive. Merck was a 1R short on the PSAR flip. Microsoft, we closed the COTA 2 for about 3R. And this little pullback, I think I'm interpreting that just as people getting out of the positions on the buying pressure. So this was capital preservation over the weekend. So until proven otherwise, that's going to be support. And I'm ready for the long side on that one. It's getting overdue. I just missed I missed this span of control in marijuana. NVIDIA closed the 3-day COTA 2 for about 3R. And much like Microsoft and the other techs, this is showing a hint of upside potential. So we got to be ready for that breakout on Monday in Techland. Clean energy, no trade. Rivian initiated the emerging dragon. It had cleared the previous humps. Just missed that one yesterday. And this closed with about 2R in hand, and it feels pretty good. You can see the S&P gapped up and then just basically sold off with a slight recovery. And today that's a waiting game. That's a Friday tactical trade, and nobody wants to hold over the weekend. Treasuries about the same thing. Tesla, I closed the 2-day SSC on this one. There's our risk. It gapped up to here, made it this high, which ran smack into the resistance level here, and then just started to fail. Once that rolled over, I'm out at the edge of the dragon for about 3R. And like the other techs, this had a nice closing move. So we'll see if that wants to continue, in which case I will be long from in here in a heartbeat. Not afraid to be short that on market weakness either. US Steel, I tried the gap and go, and then it just did not perform, so we ended up scratching. So that's the tactical trades of the day for Friday. Handful of positions held over the weekend. Balance between long and short, so we have a little bit of risk management in that sense. Still a very tactical market. Have I mentioned the book? Yes, I have. I knew that. Kidding. Sniper trade of the day. So this is an intraday trade. This is the close on Thursday. And here's the gap up, the low of the 3-minute bar, the high of the 3-minute bar. So using the OR3 technique, I would want to be long here, and I would want to be short here. And then the standard risk box on this thing is that yellow box. So you can see we've got about 2R back to yesterday's close. So that allows me to be short because there's an observable, not crazy move there, especially if this looks like a head fake, because it rolls over here, lower highs. So you got a lower high, continuing to sell off, comes down through the OR3. So I'm short with that as my risk box, checker hold. So it took until the fourth bar to erase all of the good feelings that were contained in the opening range 3. Checker hold. All right. So let's see what we got. Fails immediately. It turns around and immediately runs up. So I take the -1 loss here and just stop and reverse. And now the risk box is still the risk box, only now I'm long. Checker hold. All right, so that goes slashing north. In that first move, right after the entry, there's the next bar. So the next bar is holding +2 already, which negates the 1R loss on the first play. Then it chops around a little bit. Now it rolls over. So now I'm stalking the dragon exit, that upper skin of the dragon, which is right there. So I take that exit for about +3. I don't take the short. I do take the Kata 2 PSAR flip. Was a little late on that one. That one could have been a 1, 2, 3, like right here, which would have made that trade slightly positive. I wanted the confirmation of the PSAR flip. That failed immediately. So I take about a minus 0.5 on that one. Then it falls out of the risk box and hits the PSAR. So I'm going to get short right here on that same risk. That one fails immediately for another 0.5. So those two taken together, this one's a minus 0.5. This one's about a minus 0.5. So that nets out to, -1. That was either a +2 or +3 up there on that. Yeah, +3. So we're about net 1 for the day so far. Yeah, Lou says, is that standard behavior? Yeah. Uh, on This is Rivian, and it's very volatile, and it jumps around in the first few minutes anyway. So I just hold my nose and go. And the reason I do that is because the size of the OR3 was twice the size of the MMRB, which means this thing is in play. So when you add a large gap, a large initial move on the 3 minutes, sharp reversal right away, right at the bottom of that stack, I'm now thinking, yeah, this, you just caught me for 1R. Well done. But there's an upward impulse to this thing. The initial gap, the large move, the quick reversal. So that leads me to, and it's a very volatile stock. So that would be standard behavior for Rivian. Is that for every OR3? No. Do those four things lead me to be quick on that one? Yes. Notice there was not enough time in there to even get a partial. And the RL or the R10 is so small compared to the opening rate. Well, you're supposed to struggle with the OR3. That is a pure statistical play. There's no rationality to it. Okay? There's no deep hidden secret theory in play. But what makes me ready to reverse that quickly were the pieces of volatility that I just described. You had a combination of a very volatile stock, a large gap, a large OR3, a sharp reversal to get me short, and then a sharp reversal again. That's like 5 or 6 things that go into making a specific decision on that moment to stop and reverse. That's the reasoning for this case on Rivian today. Am I going to take one data point and generalize to all OR3s, all symbols, any volatility? No. This is such a specialized case that I'm not going to try to overthink it. I'm just going to stop and reverse because of that specific thing. It's a case unto itself. All right. So we're net 1 for the day. That's also a stop and reverse at a kata 2. So the impulse of the day is up. You had a gap, you had a quick reversal, you had a successful trade on the long side, you have a low, a higher low, the PSAR has flipped and has come through the dragon. So this short failed. So I just go long here with the standard risk. Just keep firing. It's not even a question of being right or wrong. That's the wrong frame. You want to be aligned with price. That means get right. That means adapt to what's happening now. This is not a case of, I wonder what it's doing. I know what it's doing. I'm going to make a prediction because I think it's going to do that. But instead it does that. And oh, now I'm wrong. Now that means I got to take that data point and come back and revise my entire mental model for how to predict. I'm not trying to predict anything. I'm just trying to get right. I'm trying to get aligned with price as fast as I can. You don't have to predict right. You don't have to be right. You just can't stay wrong too long. Don't stay wrong too long. Adapt now. Leave it alone. And save all that thinking for after the market closes. So this is a COTA 2, up we go. It gets interesting if it breaks above this price level, because that's a new high of the day, and that would be an emerging dragon. So all I got to do in here, inside this tactical space, is have my finger on the trigger in order to get my risk higher than my entry. As soon as I can make that move, then I will have locked in no lose plus dinner for 2. That's a battle drill. I want to lock in that little wedge of goodness. I'm not predicting anything. I'm just eliminating the possibility of losing capital on that move. That's the most important time of the trade. So in the tactical space, all I'm trying to do is get my risk out of the trade and turn this into a science project. Internalize that mindset. Don't stay wrong too long. Starting to work. You know, the first sign to me that it's working, where I can start to breathe once more, is when the PSAR, which started off here around the moment of the trade, comes out of my risk. Here's my risk, right? That's the first sign that maybe this thing is working. So that's not enough to get me out, because price is up here where the RL10 is. Hasn't even penetrated the dragon yet. And as soon as it comes down, it goes right back up, and it feels like that. The fact that it did not fail allows me to put a second position in. At 2R and new high of the day, and it broke above the previous peak of the RL10. That makes this an emerging dragon. 2R in hand with momentum, still in the first half of the day. And then it runs up a little bit more. Rolls over. I take the PSAR exit for +4, because that's about 1, 2, 3, and then +1. So this guy's 3. This one gets 1. That's 4. So when we were aligned with the direction that price was taking, we got 3R and 4R. Not aligned, -1 and -1. Net 5. And now we're short. And now I'm looking for a play back to here. Comes and hits the VWAP. I mean, couldn't draw this any better. Here's the VWAP. Comes right to it like a magnet, now reverses. Take the dragon exit. There's 1 unit of risk, 1 unit of reward, +1. Now we're net 6. It fails immediately, so I'm short again on a collapsing dragon as it crosses the PSAR. I collect 1. I take an SSC, 2R battle drill, PSAR exit for 4, and that's near the end of the day. That's not even a struggle with the OR3. That's just the OR3. That's just what happens sometimes. Traders today, um, going to try to persuade red to trade this and this, but he does get the short. There was a little more available. He tries the PSAR flip and gets a quick exit, and that's about 0.8 for the day. Stays out of the channel. Well done. Brian, OR3 and Z3 pinch right in the wheelhouse. Crushes it for 2.8. Nothing wrong with that. Hamad, still grinding. All of these trades are in the grind on the 30. And so we're just grinding the meat. I think this should be your primary decision tool, and then you supplement it with the threes. Like if you were going to trade the threes purely, then I would say, where are we on the kata 2? And then when that reverses at Z3 and there's the PSAR flip, I should be short here, not there. And then I get this trade to the edge of the dragon. And then I can try this long. And if it doesn't work, exit here and then be short here and scratch there. Intel, I should have, I should be short this entire move, which is that when it rolls over here, that's the roll over there. I should be short that entire move based on the 30-minute chart. And we're chopping around. Take your primary signal from the 30. Rivian. That's just you wanting to trade a lot here. The first time I see a clear signal after this morning chop is really right here, and that's this move. That's not much of a move, but look at how much in the chop we are. I like this one. This is the kata 2, leg 1, C1, trade 2, hope for 3. It wasn't there, but you got what was available. ExxonMobil. I should be short this whole move based on this rollover, leaving the dragon, that signal. You should be short this whole thing. Z3 pinch. Here's a breakout beyond Z3. Now this lower high means I've got to be short right here. That's late. And I should be in this one all the way to the around the PSAR. I would give that one a try and probably end up scratching. I'd give that one a try, end up scratching. It doesn't cost me anything. And I could be long here and that gets paid. And then I'd try that one maybe get that paid and try to be short there. But the big money was made on the short side on that one. Of course, on the Aussie, now compare how smooth, and we talked about this last night in the Foundations Q&A, about the smoothness of Forex compared to individual companies. Beautiful compression. Breakout from the 30-minute PSAR flip. So I should be long that whole thing. I should be getting long in here where that Z3 line. Here's almost like a fake one go to. You might have on your best day been long here, but certainly here, this isn't bad. And that's a great exit. You could be short. And if you tried this long and covered and be short there, there might have been 5R on that one. Aussie dollar. The 5-minute Aussie. George on ETHE. Sideways chop yesterday. Support level. Fake one go to. It breaks out above this. He's long with a nice reasonable stop and gets paid 1.5. Just like downtown. This is Lou on AMD. There's his risk, his long. You see how noisy that looks like with the red and the green candles? What I tried doing was just making that bars and make it a very light color so that I could concentrate on the indicators and not on all those flashing lights. But that's a nice trade. And then he's able to get short here on this high, low, high, a lower high, collapsing dragon, short from here. Trades to here, gets paid. This one, he gets long here. I'm believing, yep. Long here, gets that whole move, nice. Gets short here at the PSAR flip. Covers, tries long, quick cut, takes a break, gets long here on the SSC and gets paid there. Brings home 4.6 and notices that he's exhausted. Yeah, that'll happen. That 5-minute Aussie is has a lot going for it, I would say. All righty, let's look at the weekend reports. Okay, so we are back in bullish volatile, a smidgen, that's a technical term, at 2.01% above the 200-day moving average. So as you know, if that's the 200-day moving average, we put a 2% band around that. And today price closed 0.01% above that. So instead of being sideways like it was yesterday, it has moved us into the very edge of bullish. Volatility is still risk off. It's beyond a z-score of 1, so it is abnormally risky. That means it's a short-term trader's environment. We should minimize the overnight holding. We should be capturing intraday moves. And if you're going to hold things overnight, or in this case over the weekend, then you would like to have a mix of long and short so you can be directionally neutral. Slight recovery. New holdings going into next week for blended monthly rebalancing. The leading contenders in the different portfolios here. We're still at 0% exposed in ETF2, so it's a very vulnerable market. In the regression line fractal framework, this is daily charts. You notice that the 270 has now reached a test point where it has gone flat. And could this be the turning point? Or does it resume upward motion, or does it become sideways? Well, we don't know until we see what price does, but it has come through the barrier. This is a 30-period Bollinger Band 1.0 on the 270. So that gives you something like a buffer. And it has come through the buffer. And even the Dragon and the RL30 have come through the buffer. So this is officially a worry, which means that the downward move could come to here. And then the channel would be this, or this, or this. So these are price targets 1, 2, 3, and 4 on the downside. But you notice the slightest of recoveries the last 2 days has made the RL10 a potential turning point. And so that's leg 1. Well, call it leg 2. We'll call this leg 1 on the downside, a little recovery. Now here's leg 2. So leg 3 would take it through that price. But on the other hand, if it recovers, then we're looking for leg 1 to the upside to get back up to here. We see the RL90 has rolled over, and now we have the legendary RLXD, or I'm sorry, the regression line crossover, the 90-270, which is the slow pair. The 10 and the 30 are the fast pair. The 90-270 are the slow pair. And that officially brings this move. The last time it did that was back around here. So that whole move from November 22 to basically October 2023, that's an 11-month bullish move as measured by the RL270 and by the RL90. But this little retracement has been enough downward pressure to bring that back to zero. That's why I say this is a purely tactical trading opportunity. So that means I have no directional bias. This is all fresh. And there is some kind of small risk box here that tactically is going to start going that way. If it starts moving up the stack, that's interesting, but it's not really interesting until it gets above the peak of the RL10. That's up around 460. So this is all tactical trading. And then it becomes interesting at the first sign of confirmation of new strength. So this is all tactical. And then if this fails, this is tactical. And then it starts to confirm the bearish move here. So this is about a 10% sell-off. That's officially now a correction. And that's about a 20% sell-off. This is where, in traditional terms, that becomes a bear. For us, it would be a bear market sooner. But if it gets below 400, because that would be a 20% sell-off from the top. Is this move? But for us, a bear is if it were to go compared to the 200-day moving average, Right now, it's that little 0.01 above. If it fell 2% to the 200 and then 2% and then fell below, that's where it becomes a bear in our model, which means it has to fall $16, which would put it right at 400. So I'll call it a bear market if it gets below 400. Traditional guys would wait for a 20% sell off from the peak. And since that's 460, they would have to see a loss of $92. They're waiting to see 358, which doesn't happen till way down here. So I'm a little more aggressive on calling it a bear in that sense. The only good news out of this is that the 3-day reversed slightly. The 9-day just got to parity and is testing. So if that fails, again, it's going to come down to here, 390. If this fails, it comes to here, 390. As long as it can hold above this level, then it has to get above 460 to be considered a resumption of the trend. And then that's the previous all-time high. So that ain't bad. This has been a good long slog. Look at all of this volatility and then sort of an orderly move, volatility, orderly move, and now the test. Enough already. Blended monthly rebalancing portfolios. If you're trading that thing strictly, you have no positions, except this month you could hold 1/3 in energy because that's the only one that's that's higher than its 4-month moving average. And energy is notoriously cyclic, so don't know how much longer that's going to hold with rising oil prices and cuts in production. The only sector showing any kind of strength. When we get to ETF 32 and add a few more more focused ETFs, oil exploration, energy, blended commodities, which has a strong energy component, and everything else cash. Don't be in a hurry. In the Dow, was there any strength this week? Only Intel, which is rebounding from a 9% loss over the previous month. A little bit of strength in here. Otherwise, nothing. Caterpillar's a great American industrial company. It was flat and performing pretty well. Pretty gloomy. And ETF Max is being dominated by energy. World market model. The US large caps are above average. Mids and smalls are below average. Europe is a mixed bag in Asia. Only India is looking good. Latin America, emerging markets are lagging. Only Brazil is above average. So as bad as it is, the S&P 500 is still reasonable. And you can see commodities and oil, the only bright spot on this tactical map. But the good news is, if you're following this ETF regional report, this is not a surprise because we were already at a very reduced level of exposure because of weaknesses in the indexes, these 10 indexes. And this week, that whole model is in cash. So that's a very conservative posture. Should be looking for dividends. This is all energy. All energy. Beginning to see weakness. White and green Was great, now only good. You want to be preserving profits and then watch for the resumption in what? Banks, tech, internet, home builders, and growth. So that's why I'm very interested in that slight upward signal in Intel, Microsoft, Tesla that we looked at in the swing portfolio. In the liquidity, based on ATR percentage, these are the top 30 ETFs by average daily dollar volume over the last 30 days. The S&P, the Qs, the Russell. So liquid and volatile would be energy, should be trading it. Semiconductors, should be trading them. Utilities, too narrow to trade, to be honest. Discretionary, Brazil. And that's oil exploration, regional banks, biotechs, and gold miners. Those are the ones that are both liquid and volatile. Daily charts, go right to the dashboard. You've seen all of that. Our posture, lots of tactical trades looking favorable on the swing. There was significant weakness in Merck, Travelers, Walmart. And the first little bit of strength in Intel, up 1% today. Pretty slim pickings, though. In the ETFs, weakness in gold. How defensive does that sound? Not very. Japan and agriculture. Lots of auto framers setting up well. It's a buyer's market. So many symbols on the auto framer at better than 2 to 1. You can really pick and choose. A few of them squeezed today, and that's 3M, Boeing, and Disney. On my swing portfolio, the metals are all in pretty good shape. Alcoa, Cliff, and US Steel. So the ones that are better than 2 to 1 on the auto framer, Tesla, Intel, that looks good to me because it's better than 2 to 1 and it's at a 1% move today net, and Tesla was 1.5, so I like that. And Brazil. So I like all of those. The index mixed bag between those getting murdered in red and the residual strength in Cliff, Nike, Walgreen. Trading value, Tesla, marijuana, Nvidia, regional banks, and Intel, top 5. Mostly in the winter, and I'll leave the rest for you to review. All right, that's everything we got for today. Read that creativity article with interest. There's time to start and still join the new cohort in Creativity 202. That's essentially my personalized coaching program for you. It's the best price you'll ever get right now. It's going up at the start of the new year because I expect to start getting a lot more clients once the book is published, and I've got to respond to that increase in demand. So this is a chance to lock in, and that is a lifetime access to that course. It literally has hundreds of hours of amazing content. You see the guys doing the work and all of their detailed Q&As and their beautiful check-ins. It's really capstone course of goodness. You'll be glad you joined. That's what I can tell you. Take good care, and we shall see you Sunday for the Foundation's Q&A, guys. Take good care.